Are you watching prices fall and wondering if now is finally the right time to buy, or if waiting a little longer might save you even more? My name's Gord. I am the co-founder of the Real Estate Investment Institute. You know, if you're a realtor, ask yourself this. When your clients come to you with fear and uncertainty, are you giving them headlines or are you giving them genuinely good answers? Now let's talk about what is actually happening in Canada's housing market right now. Because if you're only reading headlines, you're probably more confused than informed. Prices are falling, buyers are hesitating, realtors are waiting, and everyone seems to be holding their breath, wondering what comes next. So today we're going to break down all of it. And we're going to look at where the market actually stands, why buyers are frozen even as prices drop, and what the latest economic data is telling us. And most importantly, what the opportunity looks like right now for buyers who are paying attention and for the realtors smart enough to guide them. Let's get into it. First, the big picture. Home prices have been slipping across Canada's major housing markets for several months now. We're talking Toronto, Vancouver, Montreal, the country's most closely watched markets, all on a consistent downward slide. And yet, despite those falling prices, sales volumes have barely moved. Early spring buying activity, which is typically when the market starts to really wake up, has been mixed at best. Vancouver is what RBC has called stuck in a low gear. Toronto saw its first month-over-month sales increase since September this past March, but 1 month does not make a trend. And the mortgage industry isn't convinced it signals anything long-lasting yet. And Montreal is still finding its footing. Now here's where it gets really interesting and a little counterintuitive. You would think that falling prices would bring buyers rushing back into the market, right? That's how it's supposed to work. Prices come down, affordability improves, demand picks up. Basic economics. But that's not what's happening. And the reason why tells us a lot about the psychology of this particular moment. Joel Fox, co-founder and COO of a company called OwnRight, put it really well. He said that there is a genuine confidence issue in the real estate market right now. And he pointed to something that we really haven't seen in a long time. The price decrease itself is actually part of the reason why buyers are staying on the sidelines. Now think about that for a second. When buyers see prices falling month after month, even if today's price looks appealing compared to what it was 2 or 3 years ago, they start to wonder, what if it keeps falling? What if I buy today and it's worth less next year? Nobody wants to step into an asset that feels like it's in free fall. And then layer on top of that everything else that's been happening. US tariffs hitting key Canadian industries. A conflict in the Middle East that has jolted bond markets and pushed oil prices higher. Fixed mortgage rates that have actually risen in recent weeks. And a labor market that, while not collapsing, is moving in fits and starts. Is it any wonder that people are sitting on their hands? Well, let's talk about the economic backdrop for a minute, because it matters more than people realize. Canada posted its first monthly job gain of 2026 in March. The economy added 14,000 positions. Now, that's not a blowout number by any stretch. And the unemployment rate stayed flat at 6.7%. But after a significant job losses in January and February, it was meaningful reprieve. What was more noticeable was wage growth. Average hourly wages climbed 4.7% year over year in March. And for permanent employees, that number was even higher at 5.1%. And that's real money going into people's pockets. And it matters when you're thinking about what buyers can actually afford. The results weren't uniform across the country. British Columbia had a rough month, shedding 19,000 jobs and pushing its unemployment rate to its highest level since 2016, outside of the pandemic. Now, meanwhile, Manitoba and Saskatchewan saw employment bounce back. Quebec's unemployment rate fell, Ontario held steady. RBC's assistant chief economist Nathan Jansen, he put it plainly. He said, despite current headwinds from trade uncertainty and higher energy prices, he remains cautiously optimistic that per-person economic growth and labor market conditions will continue to gradually improve through the year. And critically, the Bank of Canada still has room to cut rates if the economy needs it. A rate cut, even a modest one, well, that could shift affordability conditions in a meaningful way and bring a wave of buyers back to the table. So what does this actually mean if you're a buyer? Well, here's the honest answer. If you have stable employment, solid financing, and a property in mind that fits your life and your budget, the The current market is offering you something that hasn't been available for years: negotiating power. Now, sellers who have been waiting out the slowdown are more flexible than they've ever been since before the pandemic boom. Competition is thin. There is no bidding war waiting for you on the other side of your offer. You have time to think, time to inspect, time to negotiate. And here's the bigger point. The buyers who do the best over the long run are almost never the ones who time the absolute bottom of the market. They're the ones who bought when others were afraid to, held through the noise, and came out the other side with an asset that recovered and then some. Every previous period of uncertainty in Canadian real estate, and there have been plenty of them, has eventually resolved. Prices recovered, demand returned, and the people who bought during the fear came out ahead. Now let's talk to realtors watching this, because this next part is really important. A market like this one does not reward order takers. It rewards advisors. When a client sits across from you right now and says, "I'm scared, I don't know what to do. Is this the right time?" What do you say? If your answer is just to validate their fear and say, "Well, let's just wait and see," you're not serving them. You're just telling them what they want to hear. The realtors who thrive through this period and absolutely dominate when the market turns are the ones who can sit down with a client and walk them through the numbers. Not to pressure them, not to push a transaction, but to genuinely educate them. That means knowing your local price per square foot trends over 5 years and 10 years. It means being able to show a client what comparable properties sold for at similar points in previous downturns. The 2017 correction, the 2018 to 2019 slowdown, the early pandemic dip, and what those same properties were worth 3 to 5 years later. It means being able to put today's 6.7% unemployment rate or 4.7% wage growth in context and explain what those numbers historically signal about where the market heads next. When you can do that, you stop being a salesperson and you become a trusted advisor. And trusted advisors get referrals, they get repeat clients, they build businesses and weather every kind of market, not just the hot ones. And here's the bottom line. The hesitation in Canada's housing market is real. The uncertainty is real. And nobody, not RBC, not the Bank of Canada, not any economist, can tell you exactly when the sentiment shifts. But here's what history can teach us. Clearly and consistently, the window that exists when fear is high and competition is low does not stay open forever. Trade negotiations will eventually resolve. Rate decisions will be made. Geopolitical situations, as unsettling as they are, do not last indefinitely. And when confidence returns to this market, and it will return quickly and prices will reflect it. The buyers who act with information and conviction during moments like this one are the buyers who look back 5 years from now and say, that was the right call. And the realtors who guide them there, those are the ones who build businesses that last. Thanks for watching. If this was useful, please hit like, subscribe, comment below. We break down the Canadian real estate market every week with the kind of context and clarity that you're not getting from the headlines. Drop your questions in the comments. I read all of them. See you next week.